Well, the FSB has been monitoring financial stability implications of crypto back to in 2018. And at the time, we identified 4 transmission channels through which vulnerabilities in these markets might impact financial stability. So financial sector exposures to crypto assets, then wealth effects, so the degree to which changes in the value of crypto might impact investors, confidence effects, through which developments could impact investor confidence, and then finally the use of, particularly extensive use of crypto assets in payments and settlements. And the FSB stated in a report to the G20 that crypto asset markets are fast evolving and could reach a point where they represent a threat to global financial stability due to their scale, structural vulnerabilities, and increasing interconnectedness with the traditional financial system. And this was actually now exactly a year ago in a report that was published in February 2022, last year. And as you know, just a month later, the crypto markets experienced quite some turmoil in May, June last year, Terra Luna, then again in November, the FTX collapse. And the FSB has drawn some lessons from those events. Let me just mention 3 here. First, that financial stability risks to date are still limited, but linkages of crypto asset firms with core financial markets and institutions are growing again, and can grow very quickly and increase the risk of spillovers. Then, we found that the data gaps make crypto asset monitoring challenging, especially the available data is still incomplete, inconsistent, and potentially unreliable. So that's an important difference to the traditional financial system. And third, centralized trading and lending platforms, as well as stablecoins, play an important role in the crypto asset sector, and they represent a key connection or linkage between the crypto asset markets and traditional finance, as well as retail participants. So a key takeaway for the FSB is that the identified vulnerabilities in crypto asset markets are quite similar to those in traditional finance, and therefore a regulatory approach should seek to ensure the same regulatory outcome, or there is a mantra, same risk, same regulation. At the same time, the FSB has stressed that it is important to take into account the distinct features of crypto assets and to seek to harness their potential benefits while containing the risks. Just let me remind the audience that in October last year, we issued for public consultation a comprehensive set of proposals. They consisted of proposed revision to the FSB high-level recommendations on the regulation and supervision of global stablecoin arrangements. And these recommendations had already been issued or finalized 2 years ago in October 2020, and now being revised to propose a strengthening of requirements around governance, risk management, or stabilization, and in particular also the redemption of stablecoins. And then there is a second set of proposed recommendations, and they cover crypto asset activities and markets more broadly, so focusing on unbacked crypto and the intermediaries. And the respondents to the consultation welcomed the consultative reports. There was wide support for an internationally coordinated regime to address regulatory arbitrage, in particular also in recognition of that crypto assets by their nature are cross-border and borderless, so a coordinated international framework is needed. There was also support for the underlying principles of same risk and same regulation, or more precisely, same regulatory outcome, while at the same time there was a lot of emphasis also on the need to allow for innovation to happen. Strong support also for the tech neutral nature and recognition that any framework that is a regulatory framework that is adopted needs to evolve in line with the evolution of the crypto space. So it needs to be flexible to adapt and allow for changes to happen. And then finally, there were several respondents who called for a sort of international taxonomy of crypto assets and intermediaries, sort of a global terminology of the types of crypto assets, a classification of crypto assets in terms of their function, and also a differentiation amongst the different types of crypto asset intermediaries. And finally, there were several who called for expanding the framework to other aspects. And here it is, however, important to note that in line with the FSB's mandate, which is to address risks to financial stability, we do not address comprehensively all the different risk categories, such as AML, CFT, data privacy, cybersecurity, consumer investor protection, competition, taxation, and also the monetary policy or monetary sovereignty aspects, which are relevant in particular for stablecoins. So this is left to other bodies and standard setters. But the FSB is working very closely with all the other bodies, including also the FATF, to ensure that the different standard setting activities are coordinated and mutually supportive. And our aim is to provide a foundation for this global framework for the regulation and supervision of crypto asset activities, to promote greater consistency and, importantly, also the cooperation amongst different authorities. And finally, to your point regarding is this framework actually enough, in particular in light of the recent fallouts? Are they broadly captured by our recommendations? And we feel, yeah, that this is the case. I mean, had they been adopted, some of these events could at least been avoided or mitigated. And for instance, our recommendation requires strong governance, risk management, as well as effective supervisory oversight, just to name a few. Well, indeed, that is a key area of focus actually for this year. And we refer to those market intermediaries as multifunction crypto asset intermediaries. I heard some now use the acronym MCIs. We also sometimes refer to them as crypto conglomerates. And as you say, these entities typically combine under a single entity or group of entities or related entities various functions and activities such as trade matching and execution, crypto asset custody, brokerage, lending and margin trading, proprietary trading, venture capital investment, issuance, listing and clearing and settlement of crypto assets. So multiple functions. In traditional finance, there are requirements for segregation. Well, we have at this stage no such requirements for the crypto space. The market turmoil highlighted that such multifunction intermediaries represent indeed a critical part of the markets and are deeply interconnected. The FSB will analyze those structures further, and in particular also the functioning of those intermediaries. So to draw policy implications from a financial stability perspective and determine whether further policy making is needed. There is already reference to such combining of functions in our proposed recommendations, and we will examine if there is further detail needed or further strengthening, for instance, with respect of segregation of certain types of functions. Well, indeed, just last week, the FSB issued a report on the financial stability risks of decentralized finance, and the report examines the financial stability risks in various dimensions. DeFi is commonly used to describe services in crypto asset markets that aim to replicate some functions of traditional finance in a supposedly decentralized manner. What we found is that the actual level of decentralization varies quite significantly across the sector. We concluded that while the processes to provide services are in many cases novel, DeFi does not differ substantially from traditional finance in the functions it performs or the vulnerabilities to which it is exposed. So specific features may result in these vulnerabilities playing out at times differently, however, as in traditional finance. For instance, the risk of fire sales related to the automatic liquidation of collateral based on smart contracts, or the dependence on infrastructure over which DeFi developers may not have direct control, for instance, the underlying blockchain. So these are maybe distinctive features of DeFi that give rise to risks that we are not so familiar with in traditional finance. And the fact that crypto assets are underpinning much of DeFi and that they often lack inherent value or are highly volatile also magnifies the impact of these vulnerabilities when they materialize, as we have seen. And the extent to which these vulnerabilities can lead to financial stability concerns largely then depends on the interlinkages and transmission channels between the DeFi, traditional finance, and the real economy. To date, and as mentioned earlier, these linkages are still limited. However, if the DeFi ecosystem were to grow significantly, then the scope for spillovers and contagion would increase. So what is the FSB doing? Well, we will be working with other standard setting bodies who are also looking and working on DeFi, IOSCO, for instance, and will consider the potential policy responses to the risks stemming from DeFi. For example, one avenue would be to indirectly, by way of regulatory and supervisory requirements on traditional financial institutions who have direct exposures to DeFi. And then there is a question whether we should address vulnerabilities within DeFi itself and its connections with the crypto asset ecosystem. And as part of this work we will be conducting this year, the FSB will also consider, in coordination with the standard setting bodies, whether we should extend the current regulatory perimeter to capture these activities. And a consideration in this respect are the entry points of DeFi. So retail investors, traditional financial institutions, as well as stablecoins and centralized crypto asset platforms. And the FSB may consider whether subjecting these types of crypto asset activities to additional prudential and investor protection requirements, or whether there is need to step up the enforcement of existing requirements in order to reduce the risks inherent in those interconnections. So this is all work that will be undertaken in the course of this year. There is clear recognition that regulating or supervising DeFi activities is challenging, and that there'll be some further groundwork that needs to be done before coming out with specific policy proposals.